Hey guys, how you doing? Today is Friday, January 24. I remind you guys first, right? Because next Friday is public holiday in Hong Kong for Chinese New Year. So we will take a break on next Friday, and then I will see you guys again on 1 week after, right? And I will take this chance to say Happy New Year to all of you, although then that is Chinese New Year holiday, right? Not the Western New Year holiday. Right? So today we will take a look on the Netflix, right? Netflix doing very good in these past few days, right? And I think that one of the success is came from a lot of American youth now is not watching TV anymore, right? I was wrong before. 1 year and 1.5 years before, I think that a lot of streaming comes up, right? You know that Hulu, right, for the Disney, and then for YouTube can do it very easily, right? And Apple is trying to do that, Apple TV. A lot of media is trying to do the streaming, right? And there are no special technology for that, and you just buy the patent, that's it, right? But I was wrong, right? After 1.5 years, then I was wrong. Why? Because the trend now in US, right, or not only US, in Hong Kong, in Europe, in even Japan or Taiwan, the youth is the trend is less and less youth watching the TV. They tend to watch it on YouTube, right? YouTube, TikTok, Netflix. They just want to watch whenever they want to watch. I subscribed to Netflix for 1.5 years already. No advertisement. It's about 89 Hong Kong dollar per month, right? That's okay to me. And then while I go out on the bus, on the MTR, I can watch it freely with good sound effect and then good resolution. That's okay to me, right? And one thing that I have to give the goods from is Netflix. They update the movie quite fast, right? About just 1 or 2 months since they are launched it, then you can watch it on YouTube, on the Netflix. Although for some region they are region blocked, that means for some movies only on Japan, then I can use, even I subscribe to Netflix, right? The same as to US or to Europe, but it doesn't matter, right? Because then that is more than enough for me to watch, right, in Hong Kong, Netflix, right? I don't have adequate time to watch it, right? It's too many of them. That she did a great job. I subscribed to Disney before, right? Not as good as Netflix, right? Netflix had a lot of different kinds of movie, and she has her own documentary movies, right? Her own movie, her own making, right? So that's amazing to me. That's amazing to me, right? So I was wrong, right? Because the stock price now is very close to 1,000 per share already, right? So we'll take a look on that, right? Okay, then our Falcon portfolio increased it by 1% this year, right? Just past the 24 days, right? Just past the 24 days, right? So our Falcon portfolio been 126%, increased it from originally 350,000 to 790,000 US dollar, right? In 74 months. So for any of you that any question and want me to analyze on any of the stock, then you can leave your message under the YouTube, or you can directly email to me by Usstockmarketweekly@gmail.com. So this is our covering. Then you can see that a lot of them, right? A lot of the streaming in not only in US, right? I think that you can watch Prime Video outside of US already, right? Disney Disney Plus, no need to say, right? Global, right? Hulu seems is only in US, right? Am I right? Then correct me if I'm wrong, right? So Netflix success because American youth is not watching the TV anymore. Wow, yesterday Dow Jones rised at further 400 points more, right? Rise at 408 points to 44,565. We will talk about that in a minute. Nasdaq, not a lot, just rise at 44 points to 20,000 and then 53 points. This is our Falcon 350,000 portfolio, and this year we have 1% increment, right? And the portfolio performance is 126%. So we go for some news headlines, right? For so long, right? 17 years since 2008, right? The Bank of Japan heist. Then we talked about that in the last year already, and then the policy rate now stand at 0.5%, right? It is at the highest since October 2008, right? 17 years already, right? Japan rebirth again, right? So that's as we predicted in last year. Why the Dow Jones further rise up? Because Trump yesterday said then he will demand that the interest rate drop immediately, and then he will have a meeting with Powell very soon, right? So we talked about that in last year already. Why? It's because then he is putting up the tariff. He is putting up the tariff. So when the tariff goes up, in a short time, maybe 3 months or half year, then the inflation will goes up and the stock market will drop, right? So then he is using the weapon of decreasing the interest rate. Now it's 4.5%. That means then Trump still has a lot of weapons on hand, right? He is asking them, okay, decrease the interest rate, right? If for every time 25 points, then 1 year 4 times, 1 year 4 times, then he can hang in there, right? Trying to offset the inflation caused of the tariffs by him, right? It may work, but may not be completely, right? It may work, right? To a certain extent, yes, right? And then another point that why he is asking to decrease the interest rate, because it is give the advantage of the other factories came back to US, have a low interest rate, right? They can borrow the money. They can borrow the money from the bank and then do the business, right? And then a lot of enterprises in US can further expand because the lower interest rate, right? So that's what it is. We'll see, right? Then I think that he will meet Powell very soon. Trump's demand push S&P to new record. Yes, right. It rallied to S&P 500 rallied to record high on Thursday. All right. Singapore, we talked about that already, right? In last year. Then now Singapore is going to ease the monetary policy for the first time because the growth momentum is moderated more quickly than expected. Do you know why? Because the money now is flowing to Japan and Taiwan, not flowing to Singapore. Less of them flow to Singapore. And a lot of money flow to Singapore. Many of them is because of China. China's rich people then move their money to Singapore, right? But now that's over already, right? Because this is already nearly 2 years. So that's over. And then the whole world's money now is flowing to Japan and then foreign to Taiwan, not to Singapore. Singapore is very close to Hong Kong. She has nothing. Singapore has nothing, right? No AI, right? No AI. What do you want to invest in Singapore? Nothing. Right? No AI, right? Just for all the transportation, just in transit, right? Democratic country, no, right? So what do you expect to Singapore can give you? Nothing, right? Stock market, no. The better one is Japan and then the Taiwan, right? The best one, of course, is in US and then is India or EU, right? So that's as we expected, right? For Saudi, right? For Saudi Arabia, right? And then the prince, yes, the crown prince said that then they intended to invest 600 billion in the US, right? Cover the cost of Trump. That means in the coming fourth year, including this year, right? So Trump said that you better invest 1 trillion, right? But 1 trillion, that is not a round out, right? Because 1 trillion, the difference of 600 billion is 400 billion US dollar. 400 billion US dollar is a lot of money, right? So I don't know, right? So maybe it's just a joke, right? And then Boeing, right? That is strategy, right? Boeing has not posted any profit since 2018, right? That means for nearly 7 years, no profit, right? And then expecting 4 billion loss for the fourth quarter, for the chaotic 2024, right? That is a tragedy for this company. That's a tragedy for this company. Okay, then we go into Netflix. The stock price performance of Netflix just awesome. In the past 5 years, 1.7 times, right? The stock price increased it. And the past 1 year, a double. Just amazing, right? I'm speechless, right? I'm speechless, right? PE ratio a little bit high, right? A little bit high because a lot of money flow in, right? And then it's 55 times, a little bit high for Netflix, right? So she is projecting to reach the streaming market is projecting to reach 119 billion by this year, with a compound increment of 6.9% further up to 2029. Then this is right, amazing if this is true, right? And then with PE growth of 1.45 times, then she did it already, and offered a 17% appreciation potential and presents solid financial health, right? A little bit on the financial health, right? Not very bad, not very good. We'll come across it in a minute. And in the past quarter, the fourth quarter, right? Then she got 19 million new subscribers. Wow, 19 million new subscribers. And the increment in the revenue projection for this year is 12 to 14%. Just absolutely amazing, right? Absolutely amazing. Streaming market, right? We can see that this year the projection is 120 billion US dollar, and that is shocked me that they project in 2029 it's going to nearly 160 billion US dollar. There's a lot of increment on that, right? You know that Netflix is the number 2 in the streaming in the whole world, number 2, right? See that number 1 is YouTube, number 2 is Netflix, then is Prime Video, Disney Plus, and the others. We can see that in the US, right? That is the statistic. In the US in June of last year, you see that Streaming 40.3%, cable 27.2%, broadcasting 20.5%, and others is 12%. Right? That means streaming is the majority. Number of subscribers then still increasing, right? Still increasing in 2024 for Netflix. Cash content spend rise up again, right? In 2023, then dropped it, and the stock price dropped it, right? And it rise up again, right? And then the return on content spend also rise up again. This survey was done in 2023, and the number one spending for consumer is digital entertainment already. 1 year before is digital entertainment already, and the second one is the dating, and the third one is the short video, right? And then is video sharing, then blah 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 blah, something like that. And for the net profit margin, the number one is Netflix, 16%. It's very high for streaming nowadays. Then is the Fox, I think it's the Fox News, right? And then is Sony, Disney, Paramount, and then Warner Brothers. We can see that among them, right, for Netflix, Fox, Sony, Disney, Paramount, the best one for investor is Netflix, right? For past 5 years, the revenue increment is 14.77%, with a very good EBITDA margin of 26%, and the net income margin for the past 5 years is 20%, with a return on equity 34%, quite good, right? Just awesome. Much better than the others. Then you can compare the figures by yourself. And this is on our title, right? And this was done in October 23 to September 24, right? You can see that not watching, not turning on the TV for the youth in US, age from 18 to 24, 50%, right? So what are they watching? Short video, Netflix, YouTube, right? Or Facebook, something like that. Gradually, then move up to 25 to 34 years old group, then is 46, right? Turning off the TV. And then we move on to 55 to 64 years old group. That means my group, my age group, right, is only 29%. That means the older people, then they will still watch the TV, right? But for the youth, then less of them watch the TV anymore. So they watch the social media, and then the Netflix or Disney Plus. And we take a look on the currently announced financial report for Netflix, right? Both the earnings per share and the revenue beats the expectation. That is for the period up till this year, right? For the period ending January 21 of 2025. So we compare Q4 year 24 to Q4 year 23, right? So we can see that for the revenue, quite good, right? 10.2 billion US dollar compared with 8.8, right? Quite good. And then for the net income, nearly increased the double, nearly a double, right? And the global stream pay membership, right, increased about 15%, right? And furthermore, then we can see that the year 25 Q1 forecast, right? For the revenue, growing, and then for the pay membership, growing a lot, right? It's growing a lot, right? For 1869 to 2440. Wow, right? That is amazing, right? Is it true? Right? I don't know, right? And then that is just simple, awesome, right? If we compare the annual performance for Netflix for 1 year, 3 year, 5 year, 10 years, or since IPO, then Netflix, for all those I mentioned, is the performance is better than the S&P and the Netflix, right? And sorry, it's better than the S&P and the Nasdaq, right? You can see that 1 year, 3 year, 5 year, 10 year, or since IPO, right? And down, going down for the cumulative return. Netflix since IPO increased 830 times, right? If you buy 10,000 US dollar at the time, then you are rich already, right? Because she increased it 830 times, right? And there are stock splitting, right? I remember that, right? So you already very rich, right? And then for 10 years, right? Netflix increased the stock price 17 times, right? 17 times. S&P 500 2.4 times. Nasdaq 3.5 times, right? Let us go to the breakdown, right? For US and Canada, right? We compare Q4 2024 to Q4 2023, right? Revenue, better. Pay membership, better. Pay net addition, better. And then average revenue per membership, right? This quarter is 17.26 US dollar. And 1 year before the same quarter is 16.64 US dollar, right? Better. The same case in Europe, right? And only one exception is the pay net addition increment, right? It's not better than 1 year the same quarter, right? But better than the last quarter. And for Latin America, right? The same happens, right? Revenue better, pay membership better, pay net addition better. But for average spending per membership, it's not as good as 1 year before the same quarter, but better than the last quarter. Right? And then finally to Asia, all of them are better than 1 year before the same quarter. So she did a good job. So we look at the balance sheet, right? I put take and then small dash to it, right? Because that is not totally covered for all the liability, but that's still okay. The current asset is 13 billion, 13.1 billion US dollar. Then it's quite enough to cover the current liability of 10.7 billion US dollar. But the long-term debt, not small, 13.7 billion US dollar. And the net income per year projected is 7.2 billion US dollar. And there are still money from the current asset, about 2 point something. So make up the total money, then it's about 10 billion US dollar, right? It's enough to cover the debt of long-term debt of 13.7 billion US dollar, right? Because you only need to pay for the dividend, right? Or the interest, right? Then it doesn't matter for the capital, then maybe pay it 7 years later or 10 years later, we don't know, right? But that's enough, right? But not excellent for this balance sheet. So I put a tick and then a small dash to it. Net cash provided by operating activities. That's okay, no problem. As well as it's not decreased much, it's okay. So the net debt for Netflix is 6 billion US dollar, because that is in 1,000, right? 6 billion US dollar. So for the PE of for PE of 38.76, I think that's okay for Netflix, right? Because the increment is just awesome, right? Nearly a double of the net income, right? I don't know that if that is sustainable. I don't think so, right? I don't think that 100% increment in the net income in the last quarter can be sustained to 1, 2, 3, 4 quarter in 2025, right? But if like that, then 38.76 PE seems not expensive in Netflix, right? Right. So that's my analyze, right? So now the market is very high, right? The U.S. market is very high. Then it is near to 1,000 already. See that? Yesterday closing, the Netflix stock price is 984 already. Just a little one, then is 1,000. So be careful of the market, right? Okay, thanks guys for watching, and like, comment, share are appreciated, and please subscribe, right? So remember, next week then we don't have the program, and I will see all of you in 1 week after. See you guys then. Have a nice weekend. Bye bye.